welcome to the Watson Weekend. I'm your host here, Rick Watson, and the show is your irreverent take on e-commerce.
Yes, and I'm Jessica Laseski. It's feeling really good. Wolfpack Nation. Woo woo woo
What?
woo woo.
What? And if you didn't notice, Jess, there was something new in the credits today. We're official.
We are. We are. We've hit it big time.
Yeah, we hit it big time, and just in case you missed the mention, we have a new official sponsor of the show. That is VTEX, the complete and composable platform. If you need an e-commerce platform, talk to our sponsors.
That's right. We know VTEX has been a friend of the show, on the show, and shared a lot of interesting insights about where commerce is going and the role they will specifically play in that. So encourage our listeners to check them out.
Awesome. Let's talk about the earthquake. I think the building almost came down a few minutes ago here in New York City. There's a lot of chatter about that.
Yeah, that's a really hot take. And how's everybody doing in the city? What's the sentiment going? Are people hitting their bunkers, or where are we at?
I mean, in my apartment, nothing fell off the shelf, so there's that. I think it hit somewhere in New Jersey, and so I think it may have been a little bit worse there. So hopefully those folks are doing all okay.
Yeah. Well, we're thinking of everybody. Hope it's okay. And if in the event that we lose connection with Rick, I'm going to do my best to channel my inner Rick Watson while I maintain the craziness of Jessica Laseski. So we'll see if those dynamic personalities will flush out.
I know. And while we wait for those dynamic personalities to flush out, we're hopefully that Wi-Fi doesn't go. I'm going to get things started with some facts for today.
All right. Let's hear them.
All right. I mean, just in a preview of everything that we see today, in 1934, baseball superstar Babe Ruth agrees to do 3 15-minute broadcasts a week over NBC for a fee of $39,000 for 13 weeks, which is more than he got paid for all the Yankees. Sounds like a little Derek Jeter action.
It sounds like a little Derek Jeter action. It's also okay with the gambling action, so we're all good.
Exactly. 1964, first driverless trains run on the London Underground.
I like that. And we're very thankful.
London. Yeah, if you've ever been in London, it's kind of sometimes hard to tell if there are drivers in the normal cars.
It is. And is that when we first started talking about Mind the Gap, or when did Mind the Gap follow? I'm curious. We'll have to ask Vinny.
Yeah, hopefully there are no new gaps created by the earthquake in New York City.
Hopefully not.
1984, Kareem Abdul-Jabbar breaks Will Chamberlain's all-time scoring record of 31,419 points. So that was a great basketball milestone we're talking about today.
Pretty amazing. Is it more amazing, though, than the legacy we think LeBron's going to leave? There's he was very overt about retiring, so...
Yeah, LeBron is obviously going to leave a huge legacy. It's been great watching his career. He has the next generation coming around with Bronny, so hopefully his health is okay, and then he'll have a long career too.
There we go. All right, we got the next generation. So I think we want to hop into the headline hangover because we have a lot to unpack this week. We think every week there's not going to be a major news story, but it's like the gift that keeps on giving. Why don't you kick us off?
Yeah, that's what I love about retail is that there's always something new to talk about. The first story we have come up is I call it Amazon Just Walk Away. And this story is actually a little bit controversial. The story is the Information interviewed an Amazon exec, Tony Hoggett, and they apparently scooped this idea that Amazon was going to shut down Just Walk Out technology when the truth in Forrester issued a correction, and then they went on OmniTalk and issued a correction. There was all these Amazon PR teams sprung into action. So let me break it down here what actually happened. Amazon Just Walk Out was a huge waste of money still, number one. That is still true.
These are facts.
That's still a fact.
Undeniable.
Second is, it doesn't work in big stores. It's too damned expensive.
Also true. Also true. And the other thing is, it's not really addressing kind of the core of what the problems are within grocery, right? I actually have used Just Walk Out before, you've been in the airport, you walk in this like tiny little market, which is also beside the same Hudson News that has more of a variety. So I don't really know what the benefit of it is in having it in two places. But here we are. Like, yes, I used it. I grabbed a water and bada bing, bada boom. But it doesn't work if you're trying to power your grocery. And it's actually interesting. Amazon couldn't even make it work in their own stores.
Yeah, but look, the difference is, Jess, you're not understanding. Like, there are cameras.
Oh, okay. Okay. Well, that makes all the difference. And I'm glad that you cleared the air because you were right. The crisis comms team sprung into action. We have the new PR spin, and all will be well in the narrative of Just Walk Out, right?
Exactly. And so, look, what actually happened is, like, they're going to keep it in their small format stores, which they closed all of them in New York City, for the record, I think, except one. They closed them in Seattle, but things are doing great.
There's nothing to see here.
The Dash card is amazing. That's what the story is supposed to be. Our Dash card is fantastic.
The Dash card will change the landscape of retail. So, speaking of changing landscapes in retail, our friends at Shein recording record profits. They doubled to over 2 billion. That was at 700 million previously, and things are all right in the world, right? It's 4% net operating profit, not terrible at this scale. But I also have another thing that when you break this down in terms of the amount of sales, 45 billion in sales, that is a lot of fast fashion entering the market when the number or the average sale price is about $9. And so what I question is this generation of Gen Zs and millennials who are among their largest customer base are saying that they care about the environment. And actually, there was a survey done that 67% of Shein's customers said they would pay more for an environmentally sustainable product. Something does not pass the sniff test. So are Shein customers just greenwashers and frauds, or what do we got going on here?
Yeah, narrator, they do not care.
No one gives a shit. So what they care about is they have cheap clothing, and it seems like Shein is here to stay. They're now one of the most profitable companies in the world, more so than H&M, which is in their category. Still not as profitable as Inditex, which owns Zara, but probably not far away. What do you think, Rick?
Yeah, I mean, look, let's start at the top. Shein, friend of the show. Not sure that is the truth. In this case, Shein is probably not a good company from all accounts. And the fact that they're profitable means that they're just going to have more money to push cheap products and slave labor on the American market. So we'll see what happens here.
And sell their supply chain. Because remember, we talked about last week, they've got new technologies that they're going to bring to the world to help revolutionize this notion of fashion. So
yeah, I wonder what the NRF thinks about that. We'll talk about that
we're
later.
going to talk about that later. Yes, we are. What about FedEx? There was some news humming around about those guys this week.
Yeah, FedEx, FedEx has been a little bit on the struggle bus the last few years. And the news out this week is that their U.S. postal contract for air cargo, which they have done for the last 20 years, was actually up, and UPS won it. And so I've seen both sides of this out there in the blogosphere. One is that, like, oh, the volume was declining, it wasn't very good, we didn't want it anyway. And then the other side, like, FedEx, literally, where is the volume going to come from? And so I'm kind of in the place where, like, FedEx is in trouble, and how are they going to replace this volume? And even if they can replace this volume, with what?
With what? I think that's a great question. And it's there's only so many places where they can replace this volume, and it's probably a law of numbers. So what do you think the sales team's comp plan looks like this year?
They have dropped the base salary for the sales team, and now they're commission only because they need to really motivate those guys.
I think their multipliers also went up. Like,
right.
What if you hit more than 100% of your plan? You probably have like a 2x multiplier because they just need people out selling.
Right. Yeah. 10x multiples today for FedEx sales team.
There we go. All right. Well, we have another story here, kind of in the fulfillment land, which was related to Kroger. We're calling this one Nightmare on Kroger Street. And, look, I'm a fan personally of Kroger and what they try to do. I think that in the grocery space, they do look at diversification. They've launched in the marketplace space. They're trying new categories. But the whole spirit of this was they had these e-commerce fulfillment centers to just get closer to the customer and to try to attack this same day delivery in a more sustainable way. Essentially, they closed the facilities in Florida. They also closed 2 facilities in Texas. Is that a place that they should have built these logistics facilities, Rick? Does that really make sense?
Yeah, here's what Kroger, I think, failed to do is they built these online facilities that were powered by these Ocado
Yep.
automated, centers. The problem is that no one knows Kroger in these markets, and so it's like trying to a tree falling in the woods and no one is around. You put up this website in this market where people buy, in Florida, that's Publix land.
Right.
And then if you go to Texas, HEB is the king. And
Right.
everywhere else, it's like Walmart or Kroger.
Right.
And so I think they failed to do like any good marketing, I think, in those markets to drive demand for the fact that why did they need these super automated facilities to enter these markets where they're just going to take a tiny share?
Right. So maybe they just should have kind of played in the land of Krogerville. That would have worked better.
Yeah, so now Kroger has just walked out.
Kroger just walked out also. Yes. Anybody walking in?
Anyone walking into Kroger. Well, I mean, look, Walmart is taking share in grocery. That is a fact. I think Kroger is not going anywhere either. So these guys will continue to be 1 and 2 in the market. I'm still bullish on Kroger, but just not the way they entered these markets.
Yeah. All right. Well, you got one more story for us to bring us home in the headline hangover.
Yeah, it's not April Fool's anymore, but it feels that way. The worldwide head of seller services, Dharmesh Mehta, who'll be coming up next in our segment, he gave a LinkedIn post, April Fools, not April Fools, about their low inventory fee. And here are the facts. They've published about this fee at the end of last year. On April Fool's Day, he thought it was a great idea to publish a reminder that this fee was coming out soon, but that April was going to be a grace period. So apparently they're going to get credits for it. Like, we're going to start it in April, but we're going to credit you by the end of April before it hits your, like, it's first of all, super confusing.
So complicated.
And so the reality is your fees on Amazon are going up. Surprise!
As you said it before, we'll say it again. Your margin is their opportunity.
Welcome to Amazon. Your fees never go down.
Yes, we love you, and we love your take rates. So there we go.
Definitely. I'm calling this the Goldilocks fee because FBA will punish you if you're not selling through inventory, and FBA will punish you if you have too little inventory and your sell-through is good.
Well, we know that forecasting inventory is one of the biggest challenges that exist in retail today. And so Amazon sees this and like, hey, we can profit off of your bad forecasting.
Yeah. And Amazon's forecasts are always so good too. And so like all of this will be based on Amazon's forecast. And so the fact that you're now a third party, Amazon is now getting involved in your forecasting. It's not a great trend for these sellers.
It's not. But do they have any choices? We'll actually talk about it in our next segment as we kick off what NRF has to say about the state of retail.
Yeah, I'm excited to get into it. What do you got for us, Jess?
All right. So I just want to give you a quote to help ground us in what we're going to talk about in the NRF State of Retail, which if you didn't know, the NRF puts this out annually, and it really is supposed to help the retail industry set the tone for what to expect from the consumer perspective. What does the forecast and the outlook look like for the industry? And there also is just also a little like high-fiving or a self-five of, hey, the NRF is here to make your lives better. So here's the quote. I think to help kick us off. The resiliency of consumers continues to power the American economy, and we are confident there will be moderate but steady growth through the end of the year. Is that April Fool's, you think?
Moderate but steady growth. That could almost mean anything.
It really could. And that basically was the tone of the NRF. And just to kind of help talk, I'm calling this like, this is also like somewhere over the retail rainbow. Because like I get that the NRF is here and they want to be optimistic. But I think that there's just a big opportunity for the NRF to really help people set the tone for what to expect. But in watching this report, I couldn't help but question if like there was a fiction kitchen being cooked up. Here was kind of the highlights, right? And then we'll dive into some slides. So what you got in the report it was a reminder of the retail industry impact. I'm going to talk about that. Consumer spend trends, which ironically only like 3 minutes or so dedicated, seems small for what I felt like and it's an hour-long segment. We had 3 minutes dedicated to what the consumer spend trends were. And then we had some special appearances by John Furner, the president and CEO of Walmart, who's also on the board. And then there was this session on Amazon Marketplace. And it sounds
wait. What did you say there, Jess?
I know. They're friends. They're friends again.
This is amazing. Are we sure this is not an April Fool's joke?
It was not an April Fool's, and I just cannot wait to unpack this with you because there's so much more. And then we got the retail forecast. So let me just throw up the first slide for you here and what we've got, and I'll break it down.
All right.
So as we talked about, like the NRF, it was a little bit of celebrate good times. They talked about the impact of the industry that the retail industry has. Very true, right? Can't deny 5.3 trillion in GDP impact, 3 trillion in direct labor impact, largest employer in the private sector, 55 million jobs. And I think this was like the heartfelt part, which is like the retail industry is closest to the consumer. This is Matthew Shea talking. For more than 100 years, no trade association has been closer to retail than NRF. I know. It's magical.
I know.
Yeah, it's beautiful.
I can hear the violins playing.
You can. Or like the optimism, like the chariots of fire. Dun, 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 dun. Okay. All right. So we're going to go to the next one. Then we got into what was happening in the consumer spend trends. Again, 3 minutes roughly spent on this. And they talked about how the holiday spend has been positive, that consumers are really showing up and they're spending on these events. And you can see here it's Valentine's Day, Super Bowl Day, St. Patrick's Day, and Easter, which the 2024 line, if you can see, is more of like the mint greenish. And for our listeners that will be hearing this in audio, the interesting thing is if I look at and break this down, Valentine's Day flat, basically, Super Bowl a little high, St. Patrick's Day maybe there's like an inkling, Easter down. Is this really people showing up and celebrating big moments in a major way?
This doesn't give me a lot of optimism, although it makes me feel really good about the Irish.
I know. Apparently people love the Irish more than they love celebrating Easter. So what does that say about the state of the consumer? I have my thoughts. The other thing that was said here is like the NRF is optimistic about this year because of these increasing levels of consumer confidence. They're not afraid to splurge when it comes to special events or self-care. So far, this year, consumers have turned out to celebrate and shop. And this was from Catherine Cullen, who's the NRF VP of Industry and Consumer Insights. Just a little head scratcher. Okay, so let's go to the next slide because there's always a but. And the but here is, but people are prioritizing their needs over wants. And you can see
so they're talking about inflation?
They are. Yes, inflation is impacting the consumer. 46% versus 40% in March of 21, or 43% of consumers in March of 2022 saying that, yeah, we got to spend on the stuff we need because inflation's hitting us hard, not on the stuff we want. So again, there's always a but. So that was the basically take on the consumer forecast that the NRF gave to the retail community to help them out and hook them up. All right, so now let's go to the next section, which was about marketplaces. And wake up call, The NRF's big insight is marketplaces are the big opportunity for businesses, specifically small businesses, to grow and scale.
It sounds to me like, if I didn't know any better, like the savior of the NRF is Amazon.
It sure is. And in fact, more time was spent on this segment, which was with Dharmesh, who is their VP of Worldwide Selling Partner Services.
By the way,
Scott
this was the same guy who rolled out the new fee just a few minutes ago.
Yes, who rolled out the new fee. Thank you, sir. May I have another? Met with Scott Terpestra, who is the CEO and president of Jason Mark, and Jess Berger, who is the founder and CEO of Bundle and Joy. Great stories, very entrepreneurial, but
not at all produced by their PR team.
Not at all
bit.
produced by their PR team. My favorite was watching Dharmesh talk to the camera while he was talking to it did look like a little bit of a scene from Between Two Ferns, I gotta be honest with you. Very scripted. Again, not to pick on the NRF here, but it did not feel authentic one iota. And in the Amazon session, the interesting thing that was like the narrative here is like 60% of sales come from independent sellers, most of which are small business. Are these really small businesses, Rick? Because we know from the Marketplace Pulse report that China-based sellers represent nearly 50% of Amazon's top sellers in the US. And that cohort likely drives almost half of the third-party GMV. They aren't Bundle and Joy and Jason Mark.
We are not talking about that, Jess.
Okay.
Come on. There's a rug and we're sweeping stuff, everything under the rug.
Okay, so am I just supposed to shut down my real o'clock time and I get into Fiction Kitchen time, or?
Oh, we're in Fiction Kitchen time.
Okay.
100% of the time as part of this NRF presentation.
Okay, all right. Well, that's helpful because then I can get back out of reality and into the land of optimism, because now we're going to go to the retail forecast for 2024. And in the rule of thumb, when in doubt, follow the trend line. That's basically my hot take of what this forecast looked like, because you have the pre-pandemic average, which basically went back to 2010 to 2019, and you can see like that trend line is about a 3.6% growth rate. Then you shoot up in the pandemic, 2020, 2021, and now we're starting to level out, and it's like, so basically the range is like 2.5% to 3.5% is where we feel like we're gonna settle. But we're optimistic because inflation's going to come down, the Fed's going to cut rates. And then essentially their chief economist was like, yeah, but if the Fed doesn't cut rates, guys, it's going to be a tough year. I don't know if that's shocking news. So my question is, like, is this report really set in reality? Because it flies against the narrative of what we're hearing in retail. Like, there was this Bloomberg article on March 23rd where direct quote was, we have a situation in the US where consumer spending started the year weaker than expected, inflation higher than forecast, which is explaining why shoppers are pulling back. It contributed to defaults in the retail sector of the US high yield bond market soaring past 5.4% in the last 12 months, nearly double the 22-year average of 2.8%. That's according to JP Morgan Chase & Co. So it just, something isn't passing the sniff test, and I'm curious, like, what's your take on this?
Yeah, my take is that they are whistling past the graveyard a little bit, and the graveyard seems to contain a lot of the retail bankruptcies, and I think you have some data on this too.
Yeah, I do. So Retail Dive put out a report that we have 11 retailers in this like direct to consumer, what we call our D2C or digitally native retailers that are on the cusp of retail bankruptcy. And they range from brands we know and love and have talked about before, like Wayfair or Peloton. There's your kind of more like industry grocery brands like Beyond Meat. And so there's a lot that's happening. We have Joann that filed for bankruptcy. 99 Cent today announced that their stores would be closing. We have, all gone. And
it's ouch o'clock over there.
It's ouch o'clock over there. And we talked about it was rough o'clock for retail last week. I just think that while I respect the NRF in terms of what they try to do. It doesn't feel like this is actually providing insightful data to retailers on what the current state is, how they need to navigate it, what's going to be important. And yes, they also had, like I said, John, for the head of Walmart, on talking about what was happening in retail and how we have to be nimble and we have to innovate. But where was the how? Where was the statistics? Where was like the real business cases and stories that would help people? This was just like a fluff piece that apparently 6,800 people saw on YouTube. So maybe it doesn't even matter. But like in reality, why do we care?
Yeah, I mean, the state of retailer that I'm seeing is that the big are getting bigger, including Amazon. And look, the Amazon marketplace is growing, but I don't think the NRF is teasing apart the U.S. SMB seller contribution to the Amazon growth that they're including in all these numbers. And so, like, in the face of inflation, the huge political divide we have, violence in New York City, earthquakes, the price of eggs going up, it just seems like NRF thinks everything is, like, just fine. And we actually have – wait, hold on. My producer is sending me we have a video that was actually submitted from the NRF Director of Marketing, especially for this show.
That's great. Let's see it.
All right, let's run it.
A little bit like this. Bombs are flying. People are dying. Children are crying. Politicians are lying too. Cancer is killing. Texaco's spilling. The whole world's gone to hell, but how are you? I'm super! Thanks for asking. All things considered, I couldn't be better, I must say. I'm feeling super.
Yeah, I love that. I love that. And actually, it feels very on brand for them in terms of the PR perspective. The last thing I'll say that, again, was the head scratcher. No real stats around how big of an issue organized retail crime is. We know that there's a lot of lobbying happening there. So we
can't talk about that, Jess.
I'm sorry.
They did not just. Did they retract their story?
It was almost like that rug you talked about. I think that we have a 16 by 24 size, not like a normal 5 by 10 or 8 by 7. We got like big guy going out there, and the reality is lots of things being swept under the rug. I guess my hot take is the good news is NRF and Amazon are friends again, and which is good news, because now you're going to tell us about what the state of the Amazon sellers are. Yes.
Look, if you've been in Amazon Marketplace for any length of time, you've come across Junglescout, which is one of the top providers, particularly when you're talking about researching Amazon products. They also help sellers with other things. This is not a sponsored piece. They just happen to cover a lot of sellers. If you're wondering, if you're not familiar with the marketplace world, it's an area I've been involved with, kind of going back to Channel Advisor. You and I were working on at marketplaces before Amazon had a marketplace, which is crazy to think about now. But this whole report is devoted to marketplaces, and essentially what I think the industry has really settled on the definition of marketplace as there's no inventory. Right. Essentially, inventory is someone else's problem.
Yeah.
And so whatever it is, we're going to take advertising fees, we're going to take fulfillment fees, placement fees, overstock fees, understock fees, retail media, but you take the COGS.
Yes.
We don't want that. No COGS here.
We actually want nothing to do with your COGS. We want nothing to do with the liability related to the products when those COGS are
you
sold.
Put the products here. It wasn't us. We didn't
your
approve
problem.
them.
Your problem. Your hairdryer blows up and catches on fire. Not my problem.
Yeah. Again, more rugs, Jess. Keep thinking about the rugs.
Yes.
So anyway, why do brands care about this? Some of the stats that came out of the Junglescout Consumer Trends Report were that 59% of consumers start their search on Amazon. So no surprise why people care. No surprise
Yes.
why brands care.
Yes.
Let's start out the stats talking about enterprises. And for enterprises brands on Amazon, they gave a few top focus areas that I wanted to share with you. One is product research. And so to me, product research indicates, and this was a top focus for enterprise brands, is is our assortment right on Amazon? Which, certainly the products, the clients that we work with, assortment is a huge issue.
Yep.
That you have to think about before entering Amazon, because usually you don't want your whole assortment, but then what assortment is going to win? What competition is against each of those products that you're offering? Second is reporting on the health of your brand and business. And so if you've seen brands like Nike, like, oh, we're in on Amazon and we're out. The reality is the consumer is searching on Amazon,
Yes.
period. End of
Yes.
discussion. And so you have to know what's showing up when people type your brand name on Amazon. It's table
Right.
stakes.
Right. They're also searching for Lululemon dupes or Serena and Lily. So free people and not free people. So
Yeah.
yes.
They're also searching for that on TikTok. I've seen a lot of those dupe videos, which I think are pretty hilarious.
They are.
The third most popular thing that enterprise brands are focusing on in 2024 is protecting their business from bad actors, meaning probably some of those same people that NRF was touting just a few minutes ago. There's no bad GMV.
No, there is not. We love it. We love all of it.
Yeah, all GMV is good GMV. In terms of the top enterprise challenges on Amazon, there are really three. One is branding the business. If you didn't know, no one cares about your brand on Amazon, least of all Amazon. Most searches across almost all categories are between 50 and 80% unbranded, meaning you're not typing in Apple laptop. You're typing in laptop for my daughter, or
Cheap
my daughter's going
laptops.
cheap laptops. Hopefully not fake laptops.
Right.
I want a laptop and don't send me just the box laptop.
Don't send me a picture of a laptop.
Right.
Like you would get on the Wish marketplace.
So
Yeah.
branding is important. Why? You want to improve unaided awareness of your brand. You want those sales on Amazon to cross over to your direct-to-consumer channel as well as retail, which it does.
Yeah.
Second
so
is go
can
ahead.
I dig into that really quick? Because I saw like 75% of enterprise brands saying that Amazon helps them build brand awareness. Was there any indication of like what the how was there when you talked about the unbranded searches? And
Yeah, the how from Amazon's point of view is pretty simple. You pay to play.
Okay.
And so if you want to buy ads and show up when your brand term is there, rather than the Chinese sellers that are also squatting on your brand, then you should also bid on your brand term.
Show me the money.
Yes, exactly. And so Amazon does look. There's no doubt that Amazon does help people build brand awareness. Help people increase market share. Also, getting reviews is a big focus on people on Amazon, because that's how the product. There's no product on Amazon that's going to be successful without reviews, unless it's super unique and you have search traffic for something that you're the only seller of. So those are some of the enterprise brand challenges and there tends to be a big narrative on Amazon. I don't know if you've heard this, Jess. Stop me if you've heard this story before. Amazon keeps raising fees. Have you heard that before?
I think I heard a little bit about that. I think I heard something about that. I think we've talked about that.
Yes. However, in the enterprise brands they surveyed, 62% of them had a profit margin higher of 15%.
Huh.
And so my only worry with this statistics, it's just like good news, bad news. It's good news for the enterprise brands and by the way, it rose higher than last year. And so the trends are good for these enterprise brands. The bad news would be Amazon getting wind of this news. That could be a challenge.
Yeah, because they'll just all they do is take no matter what, right? So when I kind of interesting, is that because just prices increased and now consumers have just become more conditioned? Or what happened in the marketplace dynamics from your perspective that would allow for higher profit margins?
Yeah, I think a couple of things. Number one is as enterprise brands get mature on the marketplace, they don't have to pay to play quite as much. And
Okay.
so if you talk to any Amazon agency or any brand that's been on Amazon for any length of time, the game is very simple. When you launch SKUs, you need to pay a lot of money to get noticed, whether it's the Vine program or drive traffic on Amazon or off Amazon to your on Amazon listings, to get people from Google to go there. So Amazon wants you to do, and by the way, ads, like, right? To go to the
right.
top of search.
Right,
Those
right,
are the
right.
three things you essentially have to do to launch almost any product on Amazon. Now, over time, as your reviews go up, as your conversion rate goes up on your product, Amazon uses those signals, by the way, with a whole bunch of other signals, like your fulfillment speed and how well you take care of their customers, to boost your ranking. You win the buy box, and your offers show up higher in search results.
Yep.
As you do that, you don't have to advertise as much. And so I think what brands do over time is they dial back their investments on their mature SKUs and redirect that to, kind of more general DSP brand awareness or the new SKUs that they're launching.
That's smart. But we know that some of the more savvier Amazon sellers are these like Chinese sellers. They're very scrappy. They really understand the algorithms very well. They understand, to your point about reviews, how to garner those reviews very quickly, whether they're legit or not, question. But is that something that you think enterprise brands can compete as well as some of these like more scrappier sellers?
Yeah, it's usually pretty hard for large brands to compete on Amazon. And everyone loves when I say this. I have some friends who repeat it. Marketplaces are like a knife fight in a phone booth. It's very hard to actually grow your Amazon business if you don't react quickly. And so reacting quickly means that if your competitor starts to rise or they start to poach on your terms,
Yep.
or they have better listings than you need to react quickly on the marketplace. And so I think that's where enterprise brands don't seem to get it. They're like,
Right.
oh, we're just going to give, I'm just going to use an example, creative services. We do creative services today. We have to put things on our website, whatever. But knowing how to do that in an Amazon way, for the swipe on mobile,
Yeah.
that imagery on your Amazon store is quite different than the imagery on your D2C store. Frankly,
Right.
sometimes it's way better on Amazon.
Right. And I think sometimes the enterprise can get into analysis paralysis, right? Like, oh, let's look at more data. Let's look at more data. Let's look at more data before we make a decision. Whereas a lot of these less mature sellers who really have nothing to lose because they don't have a brand presence are going to be trying things 24/7. So do you think that the enterprise needs to get more nimble and just be willing to throw out the rule book a little bit?
I definitely think so, because the average enterprise, particularly if they're not on Amazon, if they don't have a big business, they think of Amazon like any other channel. And so
Yeah.
whoever the sales manager is that manages Walmart and Target, and they have a person to talk to and take to dinner and bring their catalog, and, they travel to Bentonville and they show their wares. You're not talking to nobody when you talk to Amazon. With all
No.
due respect to Amazon, it's like one of my favorite companies on earth and will continue to be, and particularly for my clients, by the way, so please don't shut them down. You're not talking to people by design. You are talking to the algorithm. It's a little bit different, like talk to the hand. Like, no, there's no hand.
No.
Because if there's a hand, it's like a robot hand.
Right. Unless you're Amazon and you're going to Shenzhen because you need to like nurture those relationships with the Chinese sellers because, Timu's like chomping at your bit. And we know that they just did a round of visits there. So they talk to some sellers. They just probably don't talk to the enterprise.
Yeah, and sometimes I get questioned like, where else should we go besides Amazon? And
Right.
The answer almost always is, don't go anywhere until you have solved Amazon. And there were some stats from Marketplace Pulse recently that said Amazon is 80% of the marketplace business in the U.S. And so I don't know
Yeah.
about you. I like the 80-20 rule. Do you like it, Jess?
I love it, actually. I'm always a big fan of the 80-20 rule. I'm also a big fan of like own the thing that's ownable for you before you go like into NFTs or Bitcoin or whatever else is like the latest fad. But you did, I think that in the report, and I can't remember if you mentioned this, like there's a percentage of Amazon sellers that do have plans to expand to Walmart. There's some percentage that's planning to sell on Shopify.
Right.
Not a huge mention of TikTok. Do you want to run through that?
Yeah. Some of the stats that I got on in 2024, only 36% of all Amazon sellers plan to expand to Walmart this year. It's up from the last year. While just a little bit less than that, 35% will start to sell on Shopify. Only 20% mentioned TikTok Shop. So I think the awareness of TikTok Shop is what I take from this stat is sort of less than the average seller, whereas Walmart, their marketplace has been growing pretty quickly the past 3-4 years. And it's very interesting to hear, and my suspicion is that this, they said Shopify. They didn't say D2C.
Right.
And so, first of all, that's a little bit,
Question mark.
I don't know if it's like creepy
Right.
or it's really good for Shopify. I mean,
Hey, they've been wanting to win with the enterprise, so
yeah. So
all
anyway, this
recognition is good.
Yeah, exactly. There's no bad
No bad
press here.
publicity.
Yeah.
But on that, we know that TikTok's been talking about lower fees. So is Temu. So is Shein. Like, is there more margin opportunity for brands outside of Amazon if they work on these smaller marketplaces?
Slightly higher margins, way fewer margin dollars.
Right. Your volume's not
Yeah,
gonna-
your volume
yeah.
is going to be so low that if you haven't optimized Amazon, you should be spending, I would say, 10x the effort on getting your Amazon business right than the other marketplaces. And so for a lot of people, they can do a reseller model on these other marketplaces, your eBays,
Yeah.
I think Walmart and Target are the other two. People report their AOVs are higher on Target, and as a result, their margins can be higher on Target. So that's good. I've seen some of my clients in the apparel industry do well on assignment outlets.
Yep.
And so I think that's an interesting challenge to look like. So I think the question, like, if we're a retailer, Amazon is going gangbusters. NRF says moderate but steady growth. What do we think of that 2024 is going to be, Jess?
I mean, well, if you go back to the NRF and you say it's like 2.5 to 3.5% growth, and what eMarketer said, like Amazon's got, was it 40% of e-commerce?
Yeah, they have 40% of U.S. e-commerce.
Yeah. So basically, I think we go to, if you are a retailer and you're not in marketplaces, maybe you want to think about that. Step one. I don't know why
Yes.
you've been holding out for so long. Probably need to put this in your arsenal.
Someone should send that memo to John Donahoe for the record.
Well, he's going to start going back into stores. That's step one. So second thing is, if you, to your point, if you are already in these marketplaces and you've not optimized them, don't chase the shiny objects. It's very natural to say, oh yeah, I want to just go out and do a spray and pray and hope for the best. But to your point, if you haven't optimized and you've like extracted all the value you can get out of the largest marketplace, you're wasting your time in other places. That's what I'm
No.
saying.
Yeah, I think so. And, we're talking about 2024. The message from all the big retailers have been margin growing faster than revenue.
Correct.
And so I think the fact is that's likely what the NRF is seeing too. I mean, a lot of these, the dollar stores seem to be kind of collapsing a little
Yes.
bit. And they're kind of whistling past the graveyard on Shein and Temu affecting these things. And even the fact that Shein is investing in some of these U.S. retailers, I would love to get an NRF take on that one.
Yeah, but I don't think you're gonna get it because in the land of rainbow, sunshine, and leprechauns, apparently, because people love St. Patrick's Day, the best news you're gonna get is stay the course. We're fighting organized retail crime. Don't worry about it. And you know, we are the gift that keeps on giving. So stay with the NRF when we got your back.
Yeah. I mean, I feel like the POTUS here is like the state of Amazon is good. I
Yes,
don't know.
it sure is. Well, talking about good states, we're going to wrap on the jobs report that came out as we round out our segment on the Consumer Happiness Index. And all we got is jobs, jobs, jobs. You get a job, you get a job, you get a job, Rick. It blew out the records here. We had 303,000 jobs coming out of the report last month for March. Unemployment rate fell to 3.8%. That's on surpassing the expectations that we were going to have 205,000 job gains. The not so good news of this is basically now the Fed's like, we're kicking it. Things are going great ish. Inflation's not exactly where we need it to be. Job market's still resilient. So maybe there is some resiliency somewhere in that narrative. And the rumblings is that the rate cut is going to move from now July to September. What's your take?
My take is this report fake news? Where are all the jobs? Like, I have never talked to more people out there that are looking for jobs.
Yeah. Yeah. Actually, you know, what's interesting is Apollo's chief economist, Torsten Slok, put out some analysis last week as well that said that, yes, while, you know, we had talked about that report last year, kind of in December, where it was outlining in the Wall Street Journal how difficult it was for people to find a job. And essentially what Torsten's analysis has said is that coming back into 2024, there has been more momentum in the job market, that with the January jobs report, the February jobs report, as the Fed has gone dovish, there's our term,
Bullish
my favorite
dovish.
term again, was bullish dovish, that there's seen acceleration, at least in the time it takes for people to find a job. I at least am noticing more on LinkedIn. While yes, there are the layoff posts, there are more posts about jobs that are out there, and there are a range of roles from executive roles to director level roles to entry level roles and you know, mid-level roles. We had Adam Rose on from you know, who had talked about that momentum. So I think it'd be interesting to bring him back and see like kind of what's the state of the state. You know, the jobs continue to be though in healthcare, government. So maybe there's some like padding, who knows? I guess there are a lot of people that are going to be cleaning up bridges now in Baltimore, but yeah, it's interesting to see.
Yeah, I mean, the challenge is AI seems to be taking a heck of a lot of jobs, particularly in technology. Everyone and venture capitalists seem to be openly. There was a segment on the Daily Show recently where Jon Stewart was talking about AI, and he was taking literal clips from tech CEOs talking about like, is AI taking jobs? And many of them were like, no, AI creates jobs. We have a prompt engineer, all these things. And then when you like cut the camera and you still like get them on, they're like, yeah, we love to create business models where there are quote unquote no human tax.
Right.
And John had a funny quote, which is like, human tax is something we used to call employees.
Yeah, you used to call it jobs. Yeah, I think, look, the ways that retailers or other businesses are going to drive value to the bottom line cannot come solely from raising prices. It's going to come from OpEx improvements, which ultimately means that there is going to be a right sizing, and that can only happen through technology. I think the question is, how fast will it be? And is it going to be as rapid as we think? I don't think it will, because while AI is brilliant and there's lots of opportunity, it's got a long road to go in terms of fully replacing sectors or functions holistically. So it'll be an interesting wait and see.
Yeah.
That's my take.
No, that's good. I'm a little bit more bearish
I know.
on the AI. I think it's already taken a lot of roles, particularly in support teams and customer service, and I think that trend is not going anywhere for a while. So
Yeah. We'll be watching. So any final words to close us out on the show, Rick?
yeah, final words. I'm just happy I'm still standing here. Like
I
the
know.
building is upright. We had an earthquake. I got an alert on my phone just 5 minutes before the show said there could be aftershocks.
Ooh, yeah. Stay safe out there, people. And we do want to close out the show saying thank you to our friends at VTEX. There's VTEX Day in Sao Paulo next week. And so it'll be fun to continue to explore their platform and their technology.
Awesome.
Thanks, everybody.
Thanks for
and
being
go
here,
Wolfpack.
folks.
If you're not cheering Wolfpack, you are not a friend.
Now we got to dance it up.
Going doubles.